the screen that is keeping the S&P 500 just under pressure at the moment. There is some green notable. AMD, remember, we got their numbers after the bell. All eyes on chips as we think about some of the tensions between US and China building. Of course, Nancy Pelosi going to Taiwan, key area for chip making, we understand, and the relationship between there and the US. We keep an eye on some of the divers, though. Amazon, some of the names that did so well last week, Apple as well. Just a little bit of profit taking, maybe, and there's signs of more risk aversion on the day. S&P 500 still off by 0.4%. Nasdaq clinging to gains, but up about 0.2% earlier. The Russell 2000, though, still up 0.25%. We are seeing a slight flight to safety, or indeed flight from what the Fed presidents are currently telling us. We thought that maybe the Federal Reserve would dial back on its focus on hawkish comments because inflation reads maybe could be rolling over, but no, actually we're reminded by, of course, the President Daly over at the San Francisco Fed saying, look, we are nowhere near done here in our fight for inflation. The Bloomberg Dollar Index goes higher. The Aussie dollar falls back after the RBA itself hikes but gives itself some future flexibility. Oil is just ever so slightly on the upside, but we had seen gold get bid earlier as we waited Nancy Pelosi, the Speaker of the House, landing in Taiwan. She lands and, well, maybe some of the relief comes into the market. Gold now off by 0.5 percentage point. Let's talk about all of the market moves. Xi Qiao is with us, financial advisor over at UBS and Global Wealth Management. And it's always great to have you as we march towards a market close where we're looking ahead to some of the earnings. We're already looking at how Caterpillar performs on the day of its earnings and underwhelming. I'm interested in what you made of commentary coming from the CEOs and the forward-looking guidance.
Well, we're very, neutral on equities at this point, and the market is very mixed as we expected. It's hard to see any meaningful upside in equities right now, especially when we don't have all the economic data. We're expecting about another 2 months of data coming out, particularly CPI numbers, jobs numbers. That will probably help the Fed determine how aggressively they're going to continue to hike the rates. And with a lot of uncertainties and risks out there, the market is going to trade pretty mixed, stay choppy until we have a little bit more certainty.
Is the certainty then revolving around how much higher yields can go, and then the pressure that puts on the present value of those equities?
Absolutely, yes. Yield is going to be a big one here that is, we're all going to pay attention to. But also, just what's happening within our own economy. We just heard from the CEO of JetBlue where, travels are strong, consumer demand is really very strong, jobs is very strong, but we are having a slower economic activity right now, and the risk of recession is still there. So, we're going to have to pay a lot of attention to the data coming in the next few months.
Well, we're going to be sticking with you, of course, as we sort of count down to that data, count down to the closing bell. Xi Qiao, of course, sticking with us. And you see an equity market really trying to find its footing. We go to the downside here within the S&P and Nasdaq, trying to hold on to unch on the day. Yields ununch, Caroline. Can we bring back that ununch? We need more ununch.
I feel like I'm going to trip on that. Ununch.
It is a Taylor kind of rate of change day. There's the Bloomberg. This is Countdown to the Close. I'm Caroline Hyde.
I'm Taylor Riggs.
And I'm Katie Greifeld.
And we have a quick check of what's happening in terms of trading because it's been a choppy day, one that was full of risk aversion to start and end, it would seem, at the moment. We had, of course, a bolt higher in terms of stocks and indeed a repricing of the bond market around lunchtime when indeed Nancy Pelosi did land in Taiwan and maybe not as concerned as the market had been, but still we are on the more risk aversion side of things at the moment, Taylor.
And we stick with some of the geopolitical events, Caroline, as we are hearing from National Security Council Coordinator John Kirby, of course, speaking to reporters there, saying that China reacted to Pelosi's travel as expected. The U.S., though, still expecting China to respond after her trip. But then again, the U.S. prepared to manage whatever Beijing chooses to do in response. So still further headlines, Katie, as we think about the implications of this trip and then further reaction to follow.
And here to help us with the implications, still with us is Shi Chao, financial advisor at UBS Global Wealth Management. And Shi, when you sort of layer on the geopolitical concerns at present with the conversation we're having about the Federal Reserve and the economy, does this just point to more volatility ahead?
Certainly. I mean, we do feel, the market's going to continue to be choppy, but I think it is important to understand, we are making progress in the U.S. Hopefully, rates would come down a little bit. Hopefully the data, as we look at the economic data, it will be a little bit better. And, we can't really control what's going to happen around the world. I mean, there's a lot going on, not just, Pelosi landing in Taiwan today. Of course, we don't want to look too much into that at this point, but that will further, that could further U.S.-China tensions. But we also have COVID lockdowns, Europe, there's the recession in Europe. So there's a lot still going on. So until we get more certainty in some of these events, I think markets will continue to be volatile.
And how do you therefore hedge for the volatility? Are you at all? Is it more about diversification? Is it more about looking for options and ways in which to protect yourself?
I think what's very important right now is to remain invested and stay invested in a diversified portfolio and try not to time the market. I mean, this is a very easy market for investors to try to time, but I think it's very important to be invested in value, defensive sectors. Particularly, we're looking at we continue to prefer energy, continue to prefer commodities, healthcare, but there's also pockets of areas in growth and growth companies and tech companies that are trading at decent valuations right now, that if you have a longer term horizon, and that'll be 2-3 years from now, I mean, it's good time to also add to these type of positions.
Can you talk to us about the pockets of winners and losers? I feel like that we've come out of this quarterly earnings season where you have a lot of companies with the pricing power and they're able to navigate some of the recent issues, and those, of course, who are still struggling and faltering. Do you see more of a divergence throughout this earnings season in those pockets?
Yes, I mean, I think throughout the year, I mean, growth in tech has just been, it's been terrible. It's a terrible year, but, value and energy has been doing well, and it will continue to do well, because of the geopolitical risk that we still have globally right now. But I think we should start to see a little bit of improvements in some of the tech earnings. And I think the most important is to stay diversified and keep your portfolios invested.
Shi Chao, I'm pleased to say, sticking with us, UBS Global Wealth Management. Talking about diversification, let's diversify the conversation a little bit. Katie's here with our stock of the hour, right?
With our stock of the hour, I'm looking at Airbnb, of course. It reports in just a couple of minutes, and you are seeing a big rally into earnings, up 5%. Going to be a really interesting read on both the domestic traveler and also the overseas traveler. Airbnb actually derives almost half of its revenue from overseas sales. Going to be a really interesting one in just a couple of minutes. But before we get there, Shi, I want to get your thoughts on positioning in the market right now, because if we look at CFTC positioning on S&P 500 futures, it's close to the most bearish net positioning since all the way back in 2016. And when you consider factors such as that, I'm curious what that could mean for the short term if those shorts get covered.
Yeah, I mean, certainly we are expecting a lot of volatility, but I think with data coming out, more data coming out, we're really hoping that the market will trade a little bit in favor of equities, but it really depends on the data right now, and it depends. I mean, there's so much uncertainty. Also depends on what's going to happen around the globe as well. We hope that as we look at a more data-driven some of the data-driven aspects, we hope that it will get a little bit better in terms of the volatility in the markets.
Rank, dare I ask, the data in which you're going to be looking at most importantly. You referenced the CPI print next week, and of course we've got the jobs data on Friday, but are there other ones, smaller, more high-frequency levels that you look at?
I think we also have to pay attention to the rest of the earnings as well. But as with the Fed meeting, I mean, there's a lot of different interpretation of the Fed meeting. But I think it's very important because the data is going to point to the direction of the rate hikes, and that's going to drive a lot of the markets as well.
What's the biggest question clients are asking you?
Well, I think this entire year. This is a great question. I think a lot of times at this, in this kind of market, clients are trying to figure out if they should be in or out of the market. I think that is the biggest question, and it's just not the way we see how to invest. I mean, we like to remain invested in a diversified portfolio. We don't want to time the market, but I think remain diversified will help mitigate the risks of the market risk, but it will also, potentially prevent a lot of investors from staying in the sidelines forever. So I mean, I think, how to answer that question is, we don't want to time the market, but we want to continue to remain invested. But, being selective and focusing on quality of certain equities is very important right now.
Gia, thank you. Financial advisor at UBS Global Wealth Management. Timing the market, not a thing. Time in the market. We've heard that one or two times, but we're not in the market today. We're actually sort of selling off towards this close, Katie.
Everything's selling off, from stocks to bonds. Feels like a real risk-off day, but I mean, if bonds aren't a haven, what is?
Good question. You have a Russell 2000 Caroline 6/100ths of 1% trying to close in the green. Again, sort of another theme of being the outperformer.
Dollar really is only king dollar once again on the day that manages to go higher. Let's have a look ahead towards these closing bells. Full market coverage right here on Bloomberg to take you to the bell and beyond.
Beyond the bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
About 2 minutes away from the end of the trading day. Caroline Hyde, Taylor Riggs, Katie Greifeld, counting you down to the closing bell, and here to help take us beyond that bell is our global forecast. Tim Stenovec, Kriti Gupta is in for Carol Massaro, and we bring together TV, radio, YouTube audiences to look at a market that is sort of selling off into this close. Tim, we're up by 0.6% on the S&P and actually down across the board, really.
Yeah, kind of a choppy day of trading. We just had a really interesting conversation with Abe Deshpande over at Centerstone Investors. He's the founder and CIO there. We took a big picture approach with him, and he actually said that he doesn't really know if there's going to be a recession at this point. He kept pointing to the strength of the consumer because you haven't yet seen the impact on the ground apart from housing, he said. You're hearing from these companies week after week that the consumer is still in a good place despite all the stressors that we're seeing on the economy.
And of course, that's going to be an ongoing question. And I think we've asked every guest here, is the bottom in? And no one has a really clear answer.
They can't see the future in the crystal ball.
They can't, but I guess that's what makes markets fun. But take a look at today's trading day. As you look at the S&P 500 inching closer to those session lows, well, the Bloomberg Dollar Index, it's at session highs.
The yields as well, hovering near session highs. I think a big reversal that we saw mid-morning or so, Katie. And I think for me, the story has been, despite the volatility, you've nailed it on the MOVE index versus the VIX index. But this actually is one of the most volatile yield days that we've seen this year. Really has been the front end of the curve, of which we know the Federal Reserve controls, that has really seen a majority of the movement this year.
Oh, big time. And it feels like, I mean, to your point, the size and scopes, they're not even that big. Really speaks to just what a year it's been chasing these Fed expectations.
Yeah, it ended up being initial worry about Taiwan, moving into focus about the worry of, well, the Federal Reserve, what the Fed presidents were saying, Mary Daly saying, we are not done yet in our fight against inflation, and perhaps we price in a more hawkish Fed. The stocks go lower by the tune of 0.6%, almost 0.7% for the S&P 500, 27 points lower as we see settlement just coming into play. The NASDAQ off by almost 0.2%, 20 points lower for big tech, which managed to be in the green for most of the trading day. Volumes elevated, the Dow off by more than 1.2%, 401 points lower. And let's bring it out to see what the Russell 2000 did, because it had managed to be outperforming throughout the trading day, and it too managed to just sink into the red by less than 0.1% overall. Taylor and Tim.
Yeah, I mean, I know we get a hard time for focusing on the Dow, but with a decline like this, the real underperformer really points to the weight that Caterpillar, Boeing, and Intel have. Between those three companies, we got over 100 points of the decline today.
And Tim, you really see it on the sector level as well, the tilt to the downside. Take a look at where we are. There's actually, for the radio audience, only 4 sectors, a few levels down within the S&P 500 that managed to close in the green. It's autos, hardware equipment, and some media and entertainment. The semiconductors, that feels pretty risk on, except that everything else is in the red. And again, for the radio audience, we go down and it feels a little bit defensive here. You have some of the dividend financials, some of the real estate, the banks, of course, as we were looking at yields rising, but again, still a further inversion of that yield curve, Creedy, which has maybe some concerns for the future of the economy.
Absolutely, and I think this is where you start to see the disconnects, the cross-asset disconnects, where you do have this bond story that is really this inversion. It's pricing in a recession. It's trading off of the names. When you look at the equity market, there is clearly a defensive bid to be had. I mean, just take a look at some of the gainers here today. NVIDIA, for example, NVDA is your ticker, and it ended up higher on the day. Once again, if you were concerned about the geopolitics, if you're concerned about the chips, it actually closed about, we're looking at up 0.5%. You buy the trade, you buy everyone's going to want. Lockheed Martin is going to be another major story. You also have defense stocks as well, Katie.
Got to jump in and talk about some breaking news that we get. Of course, MicroStrategy reporting earnings, but the big news is that Michael Saylor will assume executive chair role, not CEO anymore, stepping down. Feng Li will serve as new CEO. That, of course, is big news when we think about what a big corporate backer of Bitcoin Michael Saylor has been, really sticking to his guns. Looks like he is still, of course, involved with the company. He's the executive chair, but a big leadership change over at MicroStrategy. MicroStrategy shares sinking now, down almost 5%.
We go from MicroStrategy to Airbnb. A few of the headlines trickle out, and you get second quarter in the middle of that income statement, adjusted EBITDA. An outperformer, $711 million. The expectations from the street had been about $591.7 million. We also take a look at the second quarter nights and experiences booked, maybe about here right in line, 103.7 million versus estimates of 106 million. The big headline, though, that they are going to be buying back $2 billion in Class A common stock. And again, the forward guidance that looks pretty good. Third quarter revenue, $2.78 to $2.88 billion. Ahead of estimates, which again, Caroline had been for $2.78 billion. So better than expected guidance and big sort of share buybacks. The stock market in the after hours tries to digest what that means.
Kind of extraordinary that it's lower, considering you're getting such a significant amount of buyback on the stock. So more than almost 2% point lower on the Airbnb. We'll dig into the income statement as to why. Interesting, we go back to what's happening with MicroStrategy. Of course, kind of a pin-up Bitcoin stock and crypto stock, down by almost 5%, as the biggest proponent of crypto out there, being one Michael Saylor, is going to take a more of an elevated role as the chairman, no longer as CEO, and his focus, shock horror, is going to be on the purchase of crypto. He's saying that Saylor will focus more on Bitcoin acquisition. Remember, this is sort of a software company that basically pivoted to become an ETF tracking Bitcoin.
Yeah, I was going to say, I mean, at this point, Caroline, MicroStrategy is a bet on Bitcoin.
Yeah.
It's really hard to slice it any other way. And I'm wondering, Katie, because you've interviewed Michael Saylor in the past, what explains perhaps this, this leadership move? Because this is one that certainly wasn't announced before.
I mean, obviously, we'll have to hear it from the horse's mouth why exactly MicroStrategy is doing it. Interesting that he will be focusing on Bitcoin acquisition. That sort of speaks to their ambition to potentially buy more Bitcoin. We know that under Saylor, MicroStrategy has bought about $4 billion worth. Of course, that stake has lost more than $3 billion. Maybe the company is refocusing a little bit more on its actual business, which is a software company.
We continue to look at software companies, and the delicate dance that we do here between MicroStrategy and Airbnb is we await some other big earnings that come. And I think, Caroline, for me, sort of these further share buybacks that go ahead with
Starbucks just coming out as well. And I think you talk about share buybacks, you also talk about companies that, Airbnb had exposure to China. We're seeing Starbucks coming in with its like-for-like sales, missing expectations, a gain of 3% in the third quarter. The market wanted to see 4.26%. North America, in line, up 9%. International like-for-like sales, though worse, down 18%. The estimate had been for a 16% drop. And overall, Chinese sales falling 44%. We shouldn't be surprised given the lockdowns over COVID, but still the estimate had been for a 39% drop. And we're seeing net revenue come in at 8.15 billion, which is basically in line. It's an adjusted earnings per share.
We're digesting all of these, Caroline. I want to get a little bit more insight into Airbnb and want to bring in Mandeep Singh. Of course, you know him as our senior technology analyst here for Bloomberg Intelligence. And Mandeep, for us, in terms of the fundamentals, it's a big share buyback. But what do you also make of the numbers and now looking at some of the